Everyone uses banks. They're a part of our daily lives. We make deposits, get loans, and save our money there. However, there is a persistent understanding that banking, along with other finance professions, is a male-dominated field. So, we conducted a study to analyze gender in the banking industry. We will look at what role gender plays in the hiring and promotion practices of entry-level jobs like bank tellers and high-ranking jobs like managers. By looking at this, we will search for gender-based discrimination in the banking industry and its potential sources.
For the purpose of our study, we interviewed managers of 4 different banks. Those banks were Chase, Bank of America, BECU, and KeyBank. We asked them 4 questions each. The questions were set ahead. Those questions were what was the most important qualifications in hiring, general guidelines, and we asked if there is any bonuses provided and what was the basis for them. We also were curious to see what were the general level of education required to become a teller and what was the ratio of male and female employees at those banks.
I interviewed Bank of America and I asked them what is the most important qualifications for tellers, which is the qualifications for being a teller is like a high school graduate and college degree is plus. And he told me that one of the most important qualification is you'll be able to get along with the customers and the employees. And the managers in the bank that I interviewed are all men.
The banks we interviewed emphasized that they cared about gender diversity in their workforce, and this certainly seemed to be the case with the tellers we observed at the banks. We observed many female tellers as well as male tellers. However, when it came to managers, only 2 of 8 managers we contacted were women.
When we went to talk to Bank of America, we asked them about their promotion practices and what would merit an employee getting a bonus. The manager said that some roles have incentive eligibility, meaning that bonuses are given based on merit. Employees are required to meet or exceed stated goals, kind of like quotas. This answer illustrates one of the reasons that might account for the reason there is a better balance in the gender ratio of bank tellers, a relatively low-ranking job at a bank versus bankers or even managers. The people that are promoted are people the bank sees as being able to commit themselves to their job for a long time, work long hours, and be able to come in whenever they need them. An underlying assumption that women cannot or will not do this because they are more family-focused versus work-focused could explain why they aren't being promoted.
For our course reading, we used hiring as cultural matching. Managers said that working well with other workers at the bank was an important qualification and that they looked at when hiring new people. This is an example of cultural matching as described in the course reading, hiring as cultural matching by Lauren Rivera. Hiring is just not based on skills, but also how well one fits in with the company or certain branches. In higher-end jobs, recruiters look at how similar a candidate is to themselves. For KeyBank, we found that while recruiters sort potential employees out by skill, it is the branch manager that really decides if the candidate is a good fit for their branch by interviewing them.
In a newspaper article published in the New York Times on banking industry addresses diversity issues, Elizabeth Olson discusses how in 2016, women made up 26% of the boards in the banking and capital markets industry. As shown in the S&P 500 index, average rate of women on boards of companies was 21%. The survey has shown that fewer than 2/3 of the banking and capital markets companies had a mandatory retirement age for directors as compared to other industries such as the retail industry. Average director age for banking and capital markets companies was around 70s. This meant that banking industries are less likely in giving up directorial jobs to younger generation, which is composed of more female labor force. Similarly, the author of the article suggested that a mandatory retirement age or term limits for the directors could be beneficial in accelerating the gender diversity within banking industries.
As the result, we think it's clear there is some sort of association between gender and hiring and promotion. According to an explanation proposed by David Newman, things that one generally has to do to be considered a good worker by the boss are work extra hours, travel far away business meetings, go to professional conferences, attend training programs, be willing to work on popular shifts, or entertain out of town clients. These activities assume that employees have the time and the freedom from familial obligations to do them. Because women, especially mothers, still tend to have the lion's share of responsibility at home, they are less able than their male colleagues to prove to management that they're good, committed employees. Even if women are able to commit extra time to work, employers frequently assume that because they're women, they won't.
In conclusion, there is a visible gender disparity in the banking industry, especially in higher ranking jobs. As shown by David Newman, Lauren Rivera, Elizabeth Olson, and our research and observational findings, we found that high ranking jobs in the banking industry are already heavily male populated, and the men in these jobs are both not stepping down due to the age and acting as floodgates by using cultural matching to hire primarily men to other high ranking jobs.